What's up, guys? Hope you guys had a great weekend. I'm Justin. This is the Ivy League live stream, and boy, do I have a stream for you guys tonight. Action packed. So first, let's go over the disclaimer. Anything that I trade, I say, I'm looking at, I do, maybe I do it, I don't do it. Comments, maybe you see a trade in the comments. Listen, a lot of this stuff may not fit your risk tolerance. You are in control of your own money. I'm not telling you what to do. Don't want to tell you what to do. But it's your capital. You know, you have your own risk tolerance. You make your own decisions. And, you know, that's all. Sorry, I'm just getting messed up with the voice. Good thing is that we have sound. So that's good. Sorry. But again, that is the risk disclaimer. All right, and my decisions can change, and they probably will change as things happen. Thank you again for joining us. Just be responsible. You're your own fund manager, I guess I could say, right? You're your own fund manager. You manage your own capital. You have your own risk tolerance, you know, and ultimately you make your own decision. Man, what a past couple weeks. Let's just say that. Literally, the volatility is still. I feel like it's still here and ramping up. The markets have been just moving. They haven't been like they were in the last year. Let's just say last year. But we got it's just inflation data, earnings, Fed, and it's like we just get out of it, we go right back to it. It's insane. Again, if you don't know, if you're new, I'm Justin. This is the Ivy League live stream. Thank you guys for joining us. We're trying to get to 100 subscribers. If you could like, share, and subscribe, that would be great. We greatly appreciate it. If we've earned it, which I think you're going to like this one. I think you're going to like tonight's live stream. We got a lot of charts, a lot of ideas that I'm looking at that I'm going to do with my money. And again, that's up to you on what you do with yours, okay? We trade live Monday through Friday, 7:30 to 4. We'll probably be staying after to go over these earnings. We're going to play the earnings calls that we feel are most important. During lunchtime, we're here all day. We trade all day. Members in chat, we've been doing really great. Ever since I've started this stream, we have been calling this market spot on. All right, my goal here is to help you be able to identify, manage your risk, and ultimately make yourself some money. Okay, or at least to save you money. More importantly, to save you money. If you've gotten destroyed, okay, it's time to take it serious. It takes a little time. Come to these streams. Give us a like. Give us a subscribe. Keep me here. Keep us here. We're trying to grow a community. All right, we don't charge anything. This is free 99. So Sunday nights, we're going to go through the week, what we think. You know, we ultimately don't know. We have earnings. We have all this data. We're going to run through it, and we're going to make a game plan. But we're also going to go through tonight these different sectors. Where am I going to be long? Where am I going to be short? More than likely, I'm going to be long and short. And if it works out the way that I think it could, I'm going to be collecting on both sides of those trades. If not, something happens, I'm collecting on one of them. I'm collecting on one. All right, we've had a great couple weeks here in chat. Double-digit gains, single-digit gains, 20, 30 base hits, 100%, 200%, 400%. They've been out there if you know where to get them, if you know how to trade. And if you have any questions, please throw them in the chat. All right, if you're new, if there's something you'd like to know, if you want to go over a ticker, anything. All right, I'm here. You got me here. While you got me here, you can throw your questions in the chat. I wanted to do a couple things with the live stream this weekend, and I'll get to that tomorrow. So I'm trying to make everything a little bit better. Again, so tonight, what are we going to do? First, I'm going to show you a couple things. We're going to go over these earnings, and then we're going to go through the data, the earnings, and then we're going to go into exactly what it is, where I'm going to position myself, and some of the things that I'm looking at that'll maybe give you an idea of things you can do. Now, I still have some more work tonight to go through a couple different things, but I'm going to cover an idea. Now, macro thesis that you need to start, that I'm going to start looking for. Let me rephrase that. I'm going to start looking for this. It may not happen this earnings. It may not happen this quarter, next quarter, or the following. It will come. All right, so it's important to watch this data because this data is going to give you hints that it's going to come. And I'm going to reiterate when I get to these type of companies what it is. I'm going to get into it. So stay with us. We're going to go through these charts. We're going to run through the data, some earnings. We're going to plot out some earnings for this weekend. We're going to get our levels, okay? And what I think. We have a lot, guys. We have a lot. HCOB manufacturing PMI. Germany is a major manufacturing country, which if you don't know, they do a lot of exporting. A lot of people don't know that. They do a lot of exporting. All right. I think the one biggest data on here isn't the Federal Reserve, our Federal Reserve. All right. I want you guys to take notice in this too. Do you guys know how I tell you guys to watch the six month, 3 months? Look here, guys. 6 month and 3 month are tied up. What's that mean? Is the spread, tightening now? All right. We've got the 2s and 10s spread. I think was over. I think we hit 1%, maybe just over 1%. I'd have to look. I haven't looked at it, but I roughly know about where it was. It was just under 1%. It may be 1% now. I'm not sure, but we still have an inverted yield curve. Now this is the short end of the yield curve. These are tying up. These short ones are starting to tie up. Okay. 3 month, 5.25, 6 month, same thing. And that also goes for, and I wrote it down so we don't have to go through it, but the, what was the, so 3 months, 6 month, and for the 4 and 8 week are also tied up at 5.25. So 4 week and 8 week. Now that, you have the 3 and 6 month, but 4 week and 8 week is also 5.25. So they are all sitting at that just over 5% level. Okay. S&P Case-Shiller Home Price Index. You guys, listen. So Monday. Now I'm getting right into it right now. We're getting into it right now. So Tuesday and Wednesday, the Fed meet. We have an FOMC meeting. Wednesday at 2 p.m. is when, the paper comes out. Powell will be on at 3 o'clock. All right. So, maybe 2:30. Yeah, maybe he comes on at 2:30. I'm sorry. I think he comes on at 2:30. Let me rephrase that. All right. 2:30. I've been through so many of them. How do I not know exactly what time he comes out? I just can't. I'm pretty sure it's 2:30. Or the paper comes out at 2:30 and then he comes out at 3 is actually what I think it is. We'll see it on here, guys. So look. S&P Case-Shiller Home Price Index year over year, month over month. Guys, this is the stickiest of the sticky, if you know what I mean. All right? You want to continue to see this data come down and go negative. Okay? You don't want home prices continuing to go up with higher interest rates, or they're going to have to continue to raise. All right, they're saying that there's a shortage of homes, maybe in some places, I see all kinds of them for sale. Doesn't seem as though there are, but maybe there's so many people getting them that, they eat them up. So you want to see this. The Fed's going to watch this. The Fed will be watching this number tomorrow. I assure you. All right, they're going to be watching all of this data. All right, 5-year note auction. 4%, just over 4%. You also, that's not for us. API crude stock change, not too stressed about that. So look, we come into Wednesday. This is our Fed meeting. All right, so we have NBA 30-year mortgage rate, purchasing index, mortgage applications. They're going to be watching this. You have a lot of real estate data the beginning of the week before this Fed meeting. A lot of real estate data. New home sales, month over month, new home sales. All right. So the Fed is going to be watching this. This is the stickiest part of inflation. Home prices they've gone down in other places, but not necessarily in others where they'd like it to be, like where I'm right around where I'm at. So yes, I was right the first time. 2 p.m. Fed interest rate decision. We are expected a 25 basis point. All right, we get that 25 basis point. We are going to be at 5.5%, which was the Fed's year-end target. So we might be there. This might be it, guys. They're talking about 2. I can't remember if the summary of economic projections told us 5 3/4. I thought they wanted to be at like 5, and then it went to 5.5. Okay. I think 5.5 is where they'd like to be. All right. There is a huge lag effect, and guys, it's going to take time. It's literally been a year, a little over a year. All right. It's going to take that just to start to get half of these rates. I mean, you don't know. There's a lot, every time is different. Sorry, my shirt's just crimped up. Oh, let me twist it. Every time is different. There's a lot of liquidity that's still out there. The Fed's balance sheet's still almost $9 trillion. I don't know if they're nervous or not to start bringing that down with everything that they've done and what's happened with the banks. That's also a deflationary event when they stop lending. It's not that they stop lending. They slow lending, okay? Because it doesn't make sense for a bank to lend. They will, but again, what's the cost? Cost of capital, okay? And then Powell comes out at 2:30. Again, we have this real estate data early in the week. Does this kind of influence their decision making? Before this paper comes out, all right? So whether they get the information prior, I don't know. Building permits, month over month. All right. We go into Thursday. Guys, this data gets crazy. This is where the craziness happens. And I think you more so need to watch this than you need to watch anything else now. At least this is what I'm going to be more concerned about. Maybe it doesn't change. If it does, then I'm going to be taking advantage of it. And you better watch out, because I'm going to come on here and tell you about what kind of day we had. All right. So we have European Central Bank interest rate decision. All right. So it's not just us. The whole world, just about the whole world, is raising rates. All right. We have GDP numbers, durable good orders month over month. Still got something bigger for you. Jobless claims. Okay. We have jobless claims, wholesale inventories, trade balance. Okay. Consumer spending. Guys, this is big. And then you have a press conference. But anyway. Pending home sales year over year. Pending home sales month over month. Again, more real estate data. And then the kit and caboodle. Bank of Japan interest rate decision. This is what I'm going to be watching, and I think the whole world, as a matter of fact, I know the whole world is going to be watching this. Okay? I will get more into that. All right? But this is what I'm going to be watching. I'm actually probably going to be up. I will actually probably get up and see what the decision is. All right? So we're going to see. This means that they're going to offer, they're going to do a lot of bond buying. So you have to understand currency. All right. I'm going to say that for a whole nother lesson, because I could just go on and on about it. Just know that this number is important. All right. And you can just join us. You know what? I will get more into it the night before this comes out. How about that? I will give you guys the lowdown on why we should be watching this. And maybe I'll do it tomorrow. Maybe I can do it during the live stream, whenever. But this, I think, is the biggest data point we need to see this week. Maybe it isn't, but it could be. Just saying, it could be. We already know we're getting 25. More than likely getting 25, especially with this, with all this real estate data that's coming out. All right. Friday, it doesn't stop there. All right. This also would be number 1 or number 2. I'll put them in the same category. PCE, the inflation data that the Federal Reserve uses. It's been at 4%. Okay, 4%. Doesn't say it on here, but it is. I think it's been around 4%. Okay, they want it down to at least in the 2s, maybe low 3s. They want this to come down. It's still sticky. This is what the Federal Reserve uses. They don't use CPI. They don't use PPI. Yes, they look at it, but PCE is what the Federal Reserve uses. Inflation rate. Okay. also for Germany. Okay, so PCE is going to be huge, and that's Friday. So it's like Tuesday, Wednesday, Thursday, Friday. This market is going to get so tired, guys. I'm going to get into a couple different things, and then obviously we have the Michigan consumer numbers. Listen, so let me go to this. If let's talk about the Fed meeting. Let's say they start hinting at another rate hike. Okay, let's say if they start hinting at another rate hike, I think the market starts to price it in, and it doesn't necessarily price it in. It prices in the Fed doing too much too fast. Okay, and I really think the market will. You start getting the Fed to talk about another rate hike, and possibly even another one. Now there's two kind. We're right around two. We're pretty much at 100% tomorrow or for Wednesday, and then I think it's the August or September meeting. August, September. So September meeting, there's a blackout period. I think Jackson Hole is in August. I think. I always get them mixed up. I'm always like, oh yeah, it's early summer or whatever. But anyway, if they continue to raise rates and say that if they start raising their targets, guys, watch out. This market will price it in, and it will price it in quick, and it's going to say, guys, you're doing too much, and you're going to see 2018 again. I assure you that. I assure it. Okay? Well, actually, I can't assure anything. But deep down, I'm telling you, if they do this one, they do the next one, and they're in the process of each one, they start raising their year-end target, watch out. Watch out. All right? I still have some. I'm going to get into the markets. Okay? So Japan, Fed, PCE. Japan, PCE are the two main ones I'm concerned about. Not necessarily concerned about. Those are the two data points that I'm really going to look at, because I think those two are really going to move the markets, and we're going to see if I'm right. I think you're going to get volatility depending on if Japan changes their stance, is what I'm getting at. If they change their stance, watch currencies, watch yields, okay? Watch the dollar. I'm telling you, man. If they just, I'll get into it at the later we get down as we get down the week, because I want to get through this stuff. So earnings, I went through the economic calendar. I told you guys about the short end bond, 3 month, 6 month, and the 4 week and 8 week, how they're tied up. There's no, the 4 weeks not, I'm just going to make an arbitrary number or just a random number. It's not like the 4 week is at 5.9, and then the 8 week, the 4 week at 6, and then the 8 week is at 5. It's not like that's inverted either. So it's like there's the inversion, and now the inversion on the short end of the bond is starting to see. Let's just see if it starts to, dwindle its way. And what does that mean for the longer end? On your live stream Sunday, turn into a disaster this week. Well, there was a lot of data, and everybody, there was just, it's all good, man. It is what, that's why we can manage our risk. That's what we do. I hope you had a great weekend, NASCAR. see volatile 2 ups listed, open $3, the high of $9.50 the next day. Yeah, that's what's up, man. There's just with all this data and big cap stuff, man, that's where everybody's going to be focused for. I've been waiting for small caps to wake up, but they're not going to with this, with all this data and inflation stuff. It's just, it's going to be a little bit. We're going to need a pause. Maybe Carvana, and I still have Carvana on my list, guys. You guys got to understand, this stuff takes a little while. As long as we continue to hold that previous high, I'm just going to get into it real quick, and I'll show you what I'm talking about. All right, as long as we sit here and just do something like this, I'm still watching Carvana. Okay, I just want to see it do that and start to make a bit of a belly, like I tell you guys about. Okay, and then bang, boom. You know what I mean? I'm not ruling it out, guys. As long as you're holding this high, this square here, and even if you come down here, I'm not rolling it out. If you break this level, $37 breaks, 37 breaks, then yeah, we can talk about getting short. Now, here's the thing. They diluted shares on Carvana, so we also got to worry about that. I know some institutions really hit the November puts. And I can understand the November puts because, you know, that's what you want to do in times like this. Now, do you want to do it here? Maybe, because they may have already taken some profit. Maybe we get a small gap down. I'll get into that with the overall markets, but it may not follow the overall markets right now. I have to find out more. Here's the thing, too, with Carvana and anything like this. There are not a ton of people sitting at home with a check and nothing to do. So liquidity is going to be what I'm going to be I'm worried about. I'm worried about liquidity, and then I'm worried about them doing their offering that they were talking about. Pretty much diluting their shares. So it's going to take more money now. So it may not squeeze. But if it holds, if this thing holds up here and it just comes down and starts to curl itself up, I don't care if it takes 2 weeks. If this this $37 level, this 37 area breaks, then yeah. Maybe I'll start thinking about something different. All right. But until then, this thing could just come down. I don't know. We'll see. We'll see how it does. We'll see what the volume is. Just read and react. You just read and react. Again, it's just been doing the same thing. It just consolidates. Do you understand with GME? I traded that for 3 months before anybody was talking about it. I traded it from $8 to $11, $11 to $14, and then it was like $18 to $22. Over from October to December, January. I was trading it in October and November. I was long, I was short, but I was long 3 months before it actually happened. So these things take place, and that's what you want, because then you get a lot of liquidity. Then the short, it's just, I think personally, the longer it takes, I don't want to say the longer it takes, but this is what I like. This will continue to make people short nervous. All right, whether it squeezes or not, time will tell. All right, but either way, when it makes a big move in either direction, I'm trading it. I don't care if it's to the upside or downside. I will be short or long, whatever I got to do. So let's go back, guys. I have a lot of stuff. Like I said, I have a lot of stuff. You guys are going to love this. So I'll go back over the earnings. So let me mention. Okay. Let's talk about the macro theme before I get into all these stocks, what I'm watching, how am I going to position myself, where am I going to position myself. Let's understand that the S&Ps are trading at a 20 times multiple, okay? The risk play after AMC, move Friday of 14%. I'm going to go back, man. I appreciate that, man. I'm going to go back and write them down and so I can jot them down in my notes. Listen, guys, so I want to talk macro a little bit. I want to talk macro. What is the environment that we're in? We're in a high interest rate environment. Not high, but, we went from 0 to 5.5%. Okay. But right now it's 5.25. Okay. But possibly as of Wednesday, the likelihood is around 80-90% chance that it's going to be 5.5. So I'm going to say 5.5. We went to practically 0.25 to 5% in a year. Maybe just a little bit over a year, okay? That's one. All right? That's one. You had... So, we've done that in 1 year. So what I'm trying to get you to think of is, let's go back to 2008. Let's go back to 2008, guys, okay? Now, I'm just going to read and react. I'm telling you, it's just what I'm going to do. All right? You guys need, at least, this is what I'm going to be watching for. I'm going to be watching for this. Whether it happens this quarter, next quarter, whatever. It may not happen this quarter. You had the great financial crisis, okay? So what did you have afterwards, okay? First off, excuse me, I'm sorry. Let me show you guys something first off. Let's look at this. How far can we go back here? Let's go to the SPX, okay? Let's go to the SPX because I want you to see something. And you guys are going to relate this to what I tell you guys all the time. What do we have? We have an uptrend, a base. You had the shakeout, and then the rally. You have a base or a rally, the base. Towards the end of the base, you get the shakeout, and then you rally. I've said that. I say it every day. Every day I come on here, I'm repeatedly telling you guys that is how you find the best stocks to put yourself in, because the risk to reward is there, but you're also putting yourself on an early momentum play. When you see something make a nice rally, whether it's a year, 6 months, whatever, it rallies, puts in a base. I have a perfect example because I'm going to be long these stocks, and I'm going to show you. And then you have that small shakeout. That is weakness in the midst of strength. I've learned that from someone, and it is the shakeout period. It is the weakness in the midst of strength, okay? You have a strong stock, and it putting in that base is holding that level so that it can climb even higher. It's a good winner, a runner, whatever you want to call it. Look at ON. That's a stock I wish I owned. It has done nothing but go up. So when you have this rally and it puts in a base, you're getting new money in it, and it's healthy. It's healthy for it. Look, this is SPY. This is what the SPY's been doing since 1984. This is from the 80s. Yeah, right? 1983. Yeah. I could go back farther, but I'm not. This is perfect. Rally, base, shakeout, rally. So what are we trying to do? So what were we trying to do? We were in 2018 and all this time. We had a 0% interest, just about, they dropped interest rates. They provided liquidity, all that fun stuff that they do. All right. You had this really long rally, guys. You've had a lot of money being made. This helped people's retirements. I wonder if we're going to get we have rallied this far. From 2008 on, we're just continuing. Okay? We're just going and going and going. All right? So we've pulled back. We had 2020 COVID happen. Okay? 2020 COVID. Boom, 0.25. You rallied your ass off in a year and a half. Okay? With practically 0% interest rates, with physical, monetary. You had monetary policy from both ends, not just the Fed, but literally the government to the people. So what I'm getting at is that you've had this extreme, like this growth from companies where people were able to spend. Yields were low. Like, I wrote this down so I can help you guys out with this stuff, because I want you guys to know this, because this goes hand in hand with valuations of the multiples, okay? Especially in tech, all right? And you're like ARC innovation type stocks, all right? When they start trading over these crazy multiples of like 50, 60, 80 times earnings, there's going to come a point where they either, because of it, you got to remember, think about taxes, think about interest rates, okay? That all helped. It all helped, guys. You have a higher inflation rate, you have higher taxes, you have competition, you have consumer that is going to start struggling, possibly. It's just, let alone the inflation, okay? What I'm saying is the consumer. Now they're going to have to start paying back the college tuitions, okay? They're not getting checks anymore, okay? Yes, the job market's there, but the job market is the last to go. And again, you still have to give these rates time. We haven't given them any time. So with companies, let's say, because the companies I'm talking about aren't making any money. There is no E. There, you have your price to earnings. There's just price. There are no earnings, let alone free cash flow and all that stuff. Now you can factor in, stock buybacks. So what happens in earnings is they get to this valuation, okay? And when those companies start to not perform, not report at the rate of which they were the prior quarters, okay? Let's say that they reported a 3% growth or 3% in sales. I'm just giving you an example. The next week, same thing, 3.5% next quarter, 4%, 6%. It's going to stall, especially with rates, taxes, consumer, and competition. Okay? And then the companies that just, whether it's just was a fad, let's just say like Crocs. What happens when people move on to the new thing? Okay? But at the end of the day, what I'm trying to get at is you need to watch this quarter for whether it's ARC type stocks. Okay? When these companies start to report and the reporting is not nearly the growth that they were reporting before, and it's just mediocre, let's just say they don't even report, they just have bad quarters. The market's going to price it in, and they're going to drop down to fundamentals that make them like where they should be. The fundamentals that where they should be. They fall back to a 20 times earnings. Hell, maybe even 15 types of earnings. Maybe this is it. Maybe the company may not last much longer because of competition. Okay? Because someone else moved in and that's the new shiny object. Okay? What I'm trying to say is you're going to see this if you're new. If these, especially tech, and I'm not talking large cap tech. I'm not talking your Microsoft, your Apples. I could just say like Roblox. Okay? The Trade Desk, TTD, all right, ServiceNow, or some things like that, okay? If you find some of these high multiple stocks, like, I can't really say that. When the earnings come in and they do not match up with the valuation, the market will only take so much and they will suffer from it, okay? And I'm waiting for that. I'm looking for that because that downside I'm going to catch it. All right. And it's going to cause big problems. Some of these companies may not make it out. Maybe they do. Maybe they don't. It depends on how they were structured, how the management team was, if they were good, if they were sloppy or not, or they knew what they were doing, whatever. If they did not take the opportunity to borrow money on the rates that were, and they blow through the cash, and now they got to get it at a higher interest rate, and they're going to potentially be coming into an environment where they're going to be making less. The bank's not going to give it to them. They're going to charge them more. They're going to give them less. It's going to cause problems. But the more important thing is that if the company is not continuing to grow, you're going to see it. And I'm going to show it to you when it comes, if it comes. Because the opportunity that is made just in that playbook alone will make your month. It can make your year. Okay, so I want you guys to know that's what I'm looking for. Doesn't mean it has to happen this quarter, next quarter, or maybe it happens first quarter of next year. Okay? Maybe it doesn't happen until then. But what I'm trying to say is that this data right here is going to help show you what's going on. Do these home sales start to drop? Do things start to drop with the consumer data that we get? Where things are slowing, where, these rates are catching up. There's not as much demand. And it's not just us. The whole world is raising rates. It's just a matter of time. And I'm not sitting here, I'm not going to say his name or their names, but I'm not the one that sits here and screams, this is it. This is the end. They're scrambling. They don't know what to do. Oh my God. No, I'm not saying that. I'm just saying that some of these mid-tier companies, these mid-cap, small-cap tech companies can really get hurt, especially if their sales are not there. And they're trading at a 30, 40, 50, 60 time multiple. They report and it's just under. Okay, we're going to give you another quarter. Guess what? The market's only going to take so much, and they're going to come down to a valuation that makes sense. and they're going to come down in a hard way, and I'm going to catch that bounce back, and I'm going to be short. Okay, there may not be companies that make it out of here. Maybe we don't even know. There's companies that don't make it. We don't even know that they exist. You know, you kind of got to search for them. I'm going to get into more of that tomorrow, but I wanted you guys to really think about that as we go into this earnings. Okay, and start thinking about it for this quarter and next quarter. If you start seeing and going through the reports that, hey, their sales are way down than what they were reporting, and it's just continuously like that, it's just not good. Things are slowing and they're only growing. It's not that they don't have to grow. Like, they could report growth, but if they're reporting like a 6% sales, okay, or like 3.5%, 4.5% in their sales revenue, and then they report like a 1, and then like a 1 3/4, and then it's just mediocre and stalls, and then it's like, okay, because again, you're coming into an environment where things are different. Taxes are higher, money costs more, the consumer is going to be a little bit more tied up, competition, and it's rates around the world. So that is going to affect what goes on here. It has its trickling effect. All right. So let's get into it, guys. Do you guys have any charts or anything you guys want me to throw up? Because I'm going to show you guys what I'm looking at. I got a lot of good stuff for you guys. All right. Let's go start with the Dow, guys. You guys got to check the Dow out. Look at the Dow. It looks good. It really does. The Dow looks good. All right. I'm going to be watching the Dow. I missed this double bottom off the top end of this downtrend, unfortunately. Don't know how. I mean, this is a 4-hour chart. Let me go to the daily. Don't know how I missed it. All right, but I'm focused. I'm in the saddle. All right, week back from vacation, and I'm on my game. I did my research this weekend, and we're going to make it happen, guys. So be prepared. If you don't know, join us live tomorrow, Monday through Friday. We trade live 7:30 to 4. Cover earnings. We go over different stocks. We'll listen to earnings calls. Do different types of lessons, and we go over sectors. We find out what sectors are we long, what sectors are we short. We tie it together. Maybe we cash out on both ends. Worst case, one pays, we cut the other. Still a great day, guys. Start thinking about things like that. All right. Look at the Dow. It's just insane. Oh my gosh, I still got to go over earnings though. Let's go over these real quick. I'm looking at. Let me show you guys. I'm going to show you why I'm going to be focused on Dow stocks. All right. Let's look at XLE. Nope. Okay. Doesn't want to look at XLE. Let's look at XLE, guys. Look at that. So what do we have here? We have a rally. We have a base. And this is a weekly chart, mind you. Just curious if this was the dip here. This doesn't add up. I have this drawn wrong. I have this drawn way wrong, guys. All right. I want to show you guys the hold on. Nope, I was right. I was right there. I want to see if we can get above this 200 day. We get above the 200 day on XLE. All right. Watch out. Now you do have buying volume, but if buy volume is starting to decrease, maybe I think we're looking for a pullback and then a possible rally. All right. So just watch on those. These are the bigger names. I had a bunch I needed to write down and is that it? I guess it is it. But it's already done. Made its run here, guys. Alright. Look at the pennant breakout. These are drilling stocks. You could probably wait for the pullback. Alright. I got this one off of someone else. Boom. Alright. You could take it from here, and look at that, guys. All right, some of these drilling stocks, you're seeing where money's going. All right, you're seeing where money's going. Let's look at just to show you guys one that I've been watching. I've been saying it on the live, guys. It's made its run. Okay, it's really made its run. Now I could just have this. I don't know why these are so messed up. I really don't. I don't know what is going on here. So I do apologize, but I'm going to show you guys some things. Okay, I don't even like that there. I'd rather have it back here. All right. So let's look at. So I'm going to be looking at these guys. They're all breaking out. They're all breaking out. They've made a rally. They put in a base and shook them out. Rally, put in the base, curled themselves up. Now do we extend? All right. We're going to be watching the dollar. We're going to be watching gold. And we're going to be watching banks. Look at Zion. Look at Zion, guys. Look at this. What a steal. Reverse head and shoulders. Okay. Left shoulder, head, right shoulder. You just broke out on what? You just broke out on what? An increase in volume. Look at that. Look at that increase in volume, guys. On the breakout, that's what is showing you. I'm a dip buyer of banks. We're going to go into a couple more. So as you can tell, Dow stocks, banks, I'm going to be long, and then I'll show you where I'm going to be short and what I'm going to short. Okay? The first company I'm going to go over when I show you my short side is one that I'm going to see if the revenue growth is not there, if new sales are not there, if they start to dwindle. It's not that they won't be there. I'm sure there'll be something, but at what rate will it be there or not be there? But Zion, guys, beautiful, beautiful chart here. All right, it's getting ready to pull back. Maybe we fill this gap, so I'm going to give it a minute. All right, I have a couple more. All right, I still have to do work on that. Look at Goldman Sachs. Okay, look at Goldman Sachs. Beautiful charts, guys. Look at these. I mean, this is even putting in a longer term pennant. It really is. It's putting in a longer term pennant, which is huge, actually. So, you still got some upside there. Let me see here. So, we could actually got a pennant inside a pennant. All right, it's starting to break out. Sloppy, I know. No. I had to get a haircut and stuff today. Clean myself up, as you can tell. But look, guys, we've got this nice pennant here. It's breaking out. It's breaking out. I'm watching Goldman Sachs, so I'm going to be watching banks. Look at JP Morgan. Also breaking out. Okay? These are the stocks I'm going to be interested in. I mean, this thing is just a monster. It really is. So, but I am going to want to look for a pullback. Okay? These things are extended on the daily. These things are extended on the daily. Okay? What else did I have for you guys? I had a lot, actually. I had a lot, and I'll have to go back over them. What am I going to... So let's go over some of the earnings real quick, because Spotify is one I'm going to want to be looking at to see how they grow or don't grow. Now, it looks like you have a reverse head and shoulders there. It looks like it. So a lot of these mid-cap tech companies started to rally. Like, we're starting to get a healthy market. But which ones may not make it? Maybe they do all make it. I don't know. I don't know. But what I do see is the Dow, the IWM trying to get ready and go. But the thing about the IWM is, like, it hasn't rallied, put in a base, and then went higher. It just kind of just fell out of bed and never woke up, and then is just now trying to wake up. So we'll see. But you have a healthy market. You have mid-cap tech, large-cap tech led the way. You had banks that happened, but they recovered. The Fed helped that. And this is where I get at, where financial easing... and I didn't show you guys that chart. CDX is another one with the VIX. I wanted to show you guys. Financial conditions have eased. Like right now, we have eased financial conditions. I have to find the ticker for it. I have so much here. I was supposed to read it off. I want to watch Spotify. You have a huge level of resistance right here on Spotify. 180. 180 on Spotify. It's not a major resistance level, but you know, it's this flat bottom base right here. You can see right here where it was support, tagged it as support and hit it as resistance. Right here where it came down support, tried to rally, gap below it, and then turned it into resistance. So you're going to want to watch SPOT. They report Tuesday morning, I think. All right. I have all the goods right here. Okay. So what we're going to do is we're going to get into it. Tomorrow you have Phillips, Domino's, and Bank of Hawaii. So we have some more banks, but Spotify. And it's funny because it's before the open. Okay, I don't know if they've changed it or not. You have Biogen. Why is... Okay, there we go. So Spotify was one that I was able to get to. So if we get a pullback, if this thing has, like, let's just say, depending on how the market takes it, I will be watching for Spotify to pull back. Again, this level where it closed is 170. Okay, 170. 170, 150. I apologize. 170, 150 is the support area. All right. 165. Okay, that's a smaller level. And then 160. Okay, as the final support leg. And we'll see what happens after that, depending on how they report. To the upside, 190. Or I'm sorry, 192. 192 is the level, okay? See, the thing is that, look at the weekly chart, guys. This is why I'm thinking it may not be so well. Maybe this is how we may start our second leg of the bear market, because look at it right smack in the 200. Doesn't mean it can't break through it. You know, it doesn't mean it can't break through it. I don't know what the kids are doing, but if I have to say the chart tells me, can tell the tale, you know, you got to watch this. All right. Again, I want to be long Dow stocks, okay, for the week. I know the Dow is strong. It's starting to break out. Okay, we have Ford and GM that also report. We called this before anybody even talked about it. Now it's rolled over. All right. I came on these lives day after day. Hey, look at the pennant breakout on Ford. All right. That was a nice run. You could do. We called these things down here at these bottom tails. Okay. 11 to 14. That's a huge gain. That's a huge gain. And this is the weekly chart, by the way. Got above the 50, gapped below it. So where's the next area? You have the 90 MA, but let's look for the 50 weekly moving average. Let's go to the daily. All right. Ford and GM report, I think, on Wednesday. All right. You have the 50-day curling up. You know what's so funny? Let's see if this 50-day flattens. This is why it's important to learn how to read a chart. Who's to say that the 50-day on this down move doesn't pull itself back in here and they meet to go long at this prior support right here? This level is going to be $13 on the money. $13, okay? $13 is what I'm going to look for on Ford to go long if we get it. Now, it reports, so it may not get there, because it reports in a few days. But if it does, I will be there to possibly be long, because my risk to reward is at its greatest. Again, you got some decent sell volume here, so we'll have to watch. But knowing how to read your moving averages and to kind of predict the future, look, your RSI is down. There could be a chance that this thing bounces. The MACD is still, you know, it's starting to trend negative, but, you know, we'll see. It's right on the money. So we'll see what happens. We're going to see what happens. All right. So we have that. I don't know what GM looks like. I want to stress to you guys, you want to start looking for things that you can be long and things you can be looking to go short. Now GM doesn't look too bad. GM actually looks a little bit better. If you want my honest opinion. It just broke out. There's a nice trade idea for us. All right. That's a nice trade idea. If this thing holds, this previous pivot, look at this base here. If it holds here, you know, we can look for that to be a long. It's above all major moving averages. You just had the 50-day cross up above the 100-day. Looking like it wants to cross up above the 200-day. What is that? What is that? Does anybody know what that is? Oh, wait. This is huge. If you guys start to see this. You need to see volume, though. Again, you're going to need to see volume. What do you have getting ready to happen? Especially if this right here holds, guys. And this is General Motors. What is that? Again, Dow stocks. These are what I want to be long. Maybe not so much Boeing. There's just been a couple of things going on with Boeing. There was actually some news that we caught on Boeing because I seen this pennant and I'm like, whoa, wait. Why is Boeing looking like it's weak? There was news, I think Wednesday, Thursday, or Friday. And look at the update it had. And we kind of missed it. Or no, was it this day? It was this day right here where it just climbed and climbed and climbed and it couldn't hold its gains. Because I was look here on this day, I'm like, whoa, Boeing looks really good. Why is it not breaking out? You got to watch the volume, especially on the dailies, even weeklies, for the longer term trends. Okay, I look for those longer term trends. That way I know I got some swings, whether I'm in options and I get a bunch of time with it, you know. I get some leaps when I have this momentum type of direction. If you guys want my if you guys want my my thoughts for the week, it's going to depend on earnings, and it may also depend on Japan and what they do. But I want to see. I told you guys I'm going to be buying the dip in banks. I want to see a pullback in some of the bank stocks. Now some may be different from others, like Zion, Zion. I want to see a dip in that. I'm going to be buying the dip when I get it. Charles Schwab, if you guys did not grab Charles Schwab, man, oh man. What a great company to not own right now. Okay? And you got it at a steal. Look at that, guys. Look how beautiful that is. The drilling companies are doing the same. Gold companies. Now, this is like you don't have the buy side volume there on the daily. That's the issue with this. So it could be a failed break. Okay, it could be a failed breakout. It broke out, retested, and then the volume got low. It got low. Like, you don't want to see that. So, you know, may not be ideal on Boeing. All right. Was there news with Disney? I don't know if I thought about owning Disney early in the year, but look at it. It's just making lows. You know, there's a lot going on there. I don't even want to be a part of it just yet. Maybe when it turns around, maybe you could get a bounce just because it's down doesn't mean it has to recover, but maybe they come out with some news or something. It looks like it's trying to hold here. Like look at the MACD actually. It might be a decent buy right now, guys. I'd nibble on it. I would. Not, you know, the volume's not great, but look at your MACD. Oh my goodness. You have you have positive divergence there, guys. You know, you put in a low. Look at you're putting in a new low, but your MACD is higher. That's upside momentum. You just need some volume behind it. Maybe I'll look at that tomorrow. You have a resistance level right here. Let me actually use this. I'm actually going to leave that there. I'll use this one. All right. Look at the resistance level you have here. All right. You double topped at it. You do have your 50-day. Look at the double top. Boom, boom. I'm going to go into tech. Tech, mid cap, I want to be short. Maybe even some large caps. All right. Google, Microsoft, Meta, they all report. All right. Now the market, if they really come in and like start having basic numbers and their sales growth and they're just not growing, it's hard for them to grow at the rate that they were, obviously. But there could be some headwinds. All right. We're coming into an environment where it's not ideal that you can just trade at these multiples. This is the point I'm trying to get across. As when you trade at these higher valuations, and it's not like they're at ridiculous valuations, it's just the environment that's coming. The rates, taxes, the consumer having to pay more for oil or gas. They're going to have to pay their student loans now. There's no extra checks. There's no stimulus. Okay? There's stimulus still that's to be rolled out for jobs and things of that nature. But what's going to happen is when people slowly stop spending money, and that's why we watch the data, and we start to see that drawdown. And what is the drawdown month over month? Is it coming down at like a 2% rate? And does it speed up where you really start to see things slowing down? We can see it firsthand in the data, guys. This is why it's important to go over these things. Okay, like I said, real estate data just is in our face this week, starting Tuesday. Real estate data, guys. We have GDP, PCE, the Fed's inflation tool. Okay, we do have China earnings also that are kicking, that are giving way or starting, however you want to say it. I'm sorry, and I shouldn't apologize. If you could, we're trying to get to 100 subscribers. If you could, like, subscribe, maybe share this to someone who may want to watch. Oh, I did show you guys rig and the drillers, and we'll get into more of the drillers and all the names and stuff. I have to go back through my list that I have up here, and then I will have all that for us tomorrow. Man, Disney double topped. I'm also kind of curious. Look at the volume here on the 15-minute. I'm kind of curious if we can bring this, if we could break this level. Maybe we pull back and shake them out, and we break up through this level here at 87. Okay? At least on the daily, it doesn't look bad. So maybe I just wait for the dip, and I see what we do. All right, maybe I wait for this. You know, it's also kind of tough. You know what? Because like, what does this have to do with the consumer and slowing spending? All right, I don't really care for the chart pattern, but I can also say at least the indicators are saying that it's not too bad of a buy right now. You know, to nibble, maybe long term it. All right, 85, 86. You know, I give it to 85, 80. I get a pullback, maybe I go long. You had some volume there. Let's keep it going, guys. So, but Spotify was one of the companies I wanted to look at for, a drawdown in their earnings, because because the valuations, it's like, they have to meet the valuations. Okay, a lot of these art companies, like look at ARKK. You've seen it. The Qs have been lagging. The Dow, IWM leading. So that's banks. That's Dow stocks. Okay. Gold. What is this? ARK. See, they all kind of look like they want to break out. All right. If it holds here, that wouldn't be a bad long. 47.38 is where I had it. But let's go to the daily. All right. Left shoulder, head, right shoulder, really ugly. Actually, that's not an inverse head and shoulder. I wouldn't consider it one. It could be, but it's diagonal. I just don't like the diagonal of this. If you guys have ever, like, where's the shoulder? I guess there, maybe that's what they did. I'm not sure. So left shoulder, head, small right shoulder. So I'm like, it's a mutant. The volume's increasing to the downside. You know, the buyers are down here, guys, in this 30 or low 30 area. I think, hold on. Actually, I do see something that's not too bad here. Look at this. Boom. Boom. We could, let's do this. You're going to see this firsthand. How you do the damn thing. Okay. Let me go here. We're going to see. We're going to see where the target possibly is. You know what? I'm keeping that there because I'm right there on the end. Boom, boom. Let's measure this move. We'll go from here to here. Okay. And then I'm going to take this. And it may have already done it. I'm not sure. Maybe it takes a little more time. Okay. Maybe they report and the earnings aren't bad. See, it's already broken out. It broke out right there. Oh, shoot. This is how Thinkorswim is. It does get annoying. All right. So I will do this. All right. Let's go to auto zoom. Auto zone. Okay. All right. Oh, what do we have there? Pivot high. Look at that. Ooh. So that'll be the upside target. Maybe, the RSI is overextended on the daily. Look at the lower high on the MACD. I'll show you. You guys can't see it right now. All right. And I probably got to get into the thumbnail as well. I was doing so much today. This pivot high would be obviously my first target. Are you kidding? Oh, that's why. So I apologize for the charts, but if you guys have any tickers or questions, throw them in the chat. And again, if you find any of this information valuable, like, share, and subscribe. So look, guys, it looks like we've already pretty much gotten there. It's already made its move. All right. So we can go over Tesla. We'll go over Microsoft. I just want to go through some of these earnings and what I think, because these companies are coming into some tough headwinds. They're getting ready to come in through some headwinds that it's not favorable for them. I'm telling you. All right, let's look at Dow. I think Dow actually had some news out. Look at that. Look at that, guys. This thing is getting ready to break out. Here you go. Here's a new trade idea. All right, there's a new trade idea. Just getting ready to break out. All right, look at this. Look at this move. Where do I take it? Where do I take her? All right, we'll go here. We'll go here. Look at it curling up, guys. Girls, ladies and gentlemen. Do you see what I'm saying? Did it put in a rally? It's starting to roll itself over, but you can't deny the pattern here. Look at this. Left shoulder, head, right shoulder. It's hard to say. It needs volume. If it does end up breaking out, I will give it a look. Maybe it needs some time. You know? Maybe it needs some time. All right, let me go right here. Did we go over Goldman Sachs? So let's see. Zion. Boom, boom, boom. Support. So yes, and I just wanted to get you guys on that macro thesis, okay? Consumer spending, interest rates, taxes, all that good stuff is why you want to start thinking about where you're going to want to position yourself, or wait, especially if you're not long, you know? You can read the charts and play the charts, but you know, like Dow right here, guys, it's look at these tails off the 200 day. Look at the tails off the 200 day. Looking like it's getting ready to try and break up out of the 100-day moving average. All right. So we went over that. The transports. Let's see. What else do we have for earnings? Here, boom, 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 boom. We went over Boeing in the morning, Union Pacific, Coca-Cola, Hilton. So let's go over the good ones. So we have Microsoft and Google, After Hours, Texas Instruments, and Snap. Snap is another company that I'm talking about. That was the other one. Snap was the other company that I was talking about. We've already, obviously, look at all these levels. Holy Lord, I got to clean this chart up. Look how overextended this thing is. All right, you could get another bounce here. There's a pivot high right here that it's trying to hang on to, but this little wick is not going to be enough to hold that stock up, I don't think. Or is there more? Looks like there's more here. Yeah, right here, this base. We'll see. So, Snap, they report Wednesday morning. What do I keep going to? That no, Tuesday afternoon. Tuesday afternoon is when Snap reports. Snap is a perfect company, a perfect example of the companies I'm talking about. Look at these charts. They're ugly. Compared to the Dow, they're ugly. I would not want to invest in this right now. At least find out what multiple it's trading at. I have to do that. You have to do your work. Okay? What's the multiple is it trading at? Is it at a low multiple? Then sure, fine. But the thing is with Snap that also separates itself is as long as you have a phone, you can have Snapchat and it doesn't cost you any money. So therein lies the advantage. Okay? They don't have to, consumers don't have to physically buy the product. Now Spotify could be one where if they want to upgrade or, you know, how do they get their money compared to some of these companies like Snap? All right, I got to clean this up, but I'm going to be watching Snap. So if this holds tomorrow, this is an idea for tomorrow. All right, I will be watching Snap, and I'm going to give you guys the levels real quick. No, auto. Okay, so, and we're at it. It's got to hold this level. All right, that level will be 1275. Call it 13. 1250. Call it 1250. Yeah, we'll call it around 1250 because you can give it a little room because it put in the tail. All right. But you want to be able to buy. You just had actually look at what you have here, as a matter of fact. So Snap is on the list. Snap is on the list. This is why you guys got to come join. Like, share, and subscribe for me if you don't mind. Dude, it will be. Look, do you guys know what you have here? You have another golden cross. So maybe Snap does kind of report decent earnings. You have some decent volume here on the breakup through the 200-day. You know, the volume is decreasing. You broke below the 9. I'm trying to figure out, you know, how can I be long? Can I be short this? All right, yes, I'm going to wait till after earnings. It's got a lot of room. It's got a lot of room to go. And you know what? If I were to get rid of all this, okay, I do see a pennant rate forming right there. It's on the weekly, so it's not that great. So I don't know if I'll get the pullback on it, but you got to watch Snap. It's at a key support level. Write these levels down, guys. You got to write them down. You don't have to do anything. Again, it's a previous pivot. Okay, previous pivot. But there's more to the left I could go to, but I don't want to mess it up. So watch this 1275. Maybe give it to 1250. We'll go to the 15-minute chart for Snap. Okay. You could pull this thing back, honestly, to 1230. But again, you have the break, the retest, boom, right here at 1275. So maybe give it to 1250. But look for this thing to hold. Okay. Look for it to hold. Maybe it needs more of a pullback for the longer term uptrend. All right. The volume is like, it's not that great. The volume's not that great, but it looks like, you know, you're putting in new lows. But MACD is what? Not. The MACD's not. It's actually putting it higher. That's relative strength. Look at the low RSI on the 15-minute. So that's going to allow you to get some upside. So does Snap beat earnings? Maybe. Maybe it does. Maybe we might have another trade. Like I said, I have it written down. So I didn't go through some of these earnings, so I figured I'd go through them with you guys. You have a golden cross, again, on the daily. Right? All right, golden cross right here, 50-day breaking up above the 200 and 100-day moving average. This is a steep trend, guys. That's crazy. You know, a test back doesn't have to, but, you know, I would give it to here. I'm going to just wait. I'm not going to be pulling the trigger, but you had an increase in volume up on this break. The 9 EMA was support. Maybe it starts to roll over. I don't know. Looking like the MACD wants to roll over. Maybe you get an entry to the downside pullback. Maybe you get the daily RSI to come back down to like 60 or 55, 50-ish. You know, you got to think about these things. Does it start consolidating here and the 50-day get brought up? You know, and then it finds the 50-day for support? It's hard to say. Or maybe just you get downside. You know, 12 to 10, what is that? A 20% hit in the stock, if I'm right? So that could be, this could be another company that could, you know, what I'm doing is talking out loud both sides of the trade. How long have we been streaming? I don't want to keep you guys all night. Again, if you guys could like, share, and subscribe. We're trying to get to 100 subscribers. It's been an hour. If you guys have tickers you want to throw out in chat. If you're just joining us, I was going over, you know, the S&P 500 forward PE is 20 times. Okay, we normally trade it at a 16 times multiple. You want to watch some of these stocks that are trading at a 30, 40, 50, 60 times multiple, and then the earnings don't show for it. Okay, the earnings don't start showing for it. All right, I was also going over the Dow. Okay, because look at the Dow's pennant. Look at the banks. I'm going over stocks that I want to be long, and I'm going over stocks that I want to be short. That way, worst case scenario, I'm getting paid on at least one. I cut the other one off. Or I get paid on both, okay? Because if this is going to break out and continue, you know, maybe the Dow needs to roll over as well because there's, you know, you got this flat top base here that it looks like it hit. It might have a little more room, but we'll see. You know, it's all on, you know, these tech stocks, guys. These mid-cap tech stocks, small-cap tech stocks that just, you know, that are trading at these multiples that they need to, when it comes to earnings, they start slowing that growth, and their sales are not the same at the same rate. Okay, the market will bring them down if they're not growing at the rate as they were. If that rate slows and then it slows to just like a small percentage that's basic, 2% or so, you know, the market will hit them for it. Look at TTD. All right, this is the trade desk. This is a stock I really like. All right, what happened to them? They got beat up. All right, I forget what earnings it was. Something happened. I know they did good here. I thought maybe it was another company. Where was it? I think it might have been here, guys. Yeah, look, boom, boom, boom. They missed. You know, they missed. It's not that they missed. They still are growing. It's just when they were at this multiple, and then they go and they report, and they're like, their sales revenue was at like a 3% every quarter they're growing. It goes from like they had like a 3% increase in sales this quarter. Next quarter it was 3.5, and then next quarter it was 4.5, and then it was like they're growing, and then it's like 2. You know, 1 in 3 quarters. Like they're not growing at the rate that they were, so therefore their multiple, they're trading at a too high of a multiple, and it's going to get sold. The market's going to sell it off. I like the trade desk, guys. I don't know when it reports, but it'll be 8-9. So let's go to, I know ServiceNow reports. It's another great company. All right, I have not traded this stock or bought it. It's breaking out. Okay, another one that's got a reverse head and shoulders. You have this clear base right here. Oh, come on. All right, you have this clear base. Let's go to the weekly chart first because we want to see where our levels are at. So it's above all the major moving averages, guys. It's got to look at this candle here. It's not good. It's not good. So it rejected this flat top base. You see how there's support here? See how it bounces, support, breaks it, resistance, resistance, resistance. Breaks it. Here's another level right there. So maybe there's the range. Maybe we're on the top end of the range and we pull back. Oh, funny. Where's that at? That takes you right to the 100 weekly moving average. All right. So let's see here. I could actually bring that up a little bit. Not really. This should be okay. So ServiceNow reports on the 26th. When is that? 3, 4, 5, 6. So that's like Thursday. Maybe we start looking for, because you see how it extends and then the volume just like falls off, but the buyers are coming in on these dips. I want to see those multiples. Let's go to GLD real quick. Again, guys, XLE. I want to see the drilling names. I'll give you guys that list tomorrow morning. But look at this. Look at this pennant. Breakout, test, boom. Look how green it is. You know, it's not high volume on those days, but it's all green. It's consecutive buying. This is where the money's going. Look at the RSI. It hasn't even topped out yet for the major pullback. This may have some room to go. Maybe we break the 100-day moving average. All right. If I had to say, if this is a clear breakout, we're going to measure the move. We're going to measure the move. All right. And that is going to be right here. I'm going to take this. I think that's a little too far. Oh, that's why I did that. I see now. Let's see. Because you can see how it puts in like a base here. It rallied, put in a little base, and then this is the shakeout right here. It's the shakeout, and then it catches support, starts the rally, second leg of the rally. Man, I wish we got a lower low there, but this is fine. Look at this island reversal. I missed this day. It's a shame because this thing just went. You know, it's nice to know when you start seeing stuff like this what it's doing. It's putting in the flag. It's putting in this part of the flag. You know, so if we measure this move real quick, let's just see where we could potentially where we could potentially go. It's going to be kind of hard because it's at the top. I'm going to actually just put it here, right there. Let me make sure I am on My mic's on. I don't know, guys. Could we? Could we make it up there? Okay, so okay. I was gonna say, is there anything above us? So there we go. And you know what? Look at the weekly chart on it. Again, these are the bigger names. All right. I'm more interested in the and look at the breakout on it. You know, it broke out, it pulled back to test it, boom. The volume, it does have a decrease in volume. You know, it's still green, it's still closed green. So, you know, you can break it off into levels. You know, the first target's going to be 87. All right, that's what I'm going to do. I'm going to be looking for 87 on XLE. If I decide to choose that, I may just trade the actual companies though. And I'll give you guys the list of that tomorrow morning once I go through them and get you all the ones that I'm looking at. Right here, guys. That's what I'm going to be looking for. This area right here. All right. If I scroll to the left, just what comes up. We have a gap fill here. We've broken past the gap. All right. So it's not pretty, but 87.50, 87.41 is going to be the upside target. We got to break through the 200-day. This could be a failed breakout. So you watch for both. If I had to say if it was a breakout or not, it's hard. It's hard because, let's see, high. If it hasn't put in a new high with a lower RSI. So, you know, we'll just watch it. I'm 50-50. You know, maybe bullish with the pattern and the Dow going. And I went over banks, right? We went over Goldman Sachs, I'm pretty sure. Yeah, we went over Goldman Sachs. I want to see a pullback on Goldman Sachs. I want to see a pullback. This is what I mean. I want to be a buyer of pullbacks if I get them. I may not get them. They may continue to run. I'll get them eventually, or they'll just leave me, and that's fine. I'm okay with that. So it broke out. Like, there's a perfect area for it to pull back to 340. If I could get a pullback to 3, see, there's a double top. Look at that double top right there. How it broke through it. Right here. 1, 2. You know, we've broken through the 200-day. This is tough. This is tough, guys. This is a tough chart to chart, actually. And you know why? It's because it's Goldman Sachs. It's because it's Goldman Sachs. That's why. Look, you see how you had the steep rally? Boom. That starts giving you, you know, it's forming the base. Let's go to the weekly to make it easier. If you ever struggle with getting your levels, like where's your support and resistance, don't be afraid to go to the weekly. It's important. Like right here, this is it. I'm almost certain. It went a little bit below it, but I'm going to say right here is is our area. Let me pull it back. Right here. Right there. All right. Break. Comes up. Tests it, pulls back, 9 EMA, breaks it, boom, boom, double bottom, tries to rally, double top, comes down, turns it into resist, it breaks it, pulls back, resistance, 9 EMA, also right there, sell trigger, boom, and then it sells. So you got to learn how to read charts, guys. You guys learn what these moving averages are doing so that you can foresee what's going to happen. So you can foresee what's going to happen. You're getting ready to possibly have the 50-day move up above the 50 weekly moving average, pull up above it. Again, you have your downtrend line right here. So you have at least to there, or we get our pullback to this base. You know, this base right there. Breaks up, boom, breaks up. This might even be the area, actually. I don't know. I like them both. It's hard. It's Goldman Sachs. They're going to make it difficult. But that doesn't mean we can't figure it out. Doesn't mean we can't figure them out. So, yes. So we have resistance. Put in a double bottom. Let me see here. There's no gap fill. All right, so that's that. JP Morgan, we went through. WFC, let's go through that. Oh, what was going on there? And this is Wells Fargo. This may not be a good one. Bank of America, we can look at. Not that it's that great. I don't think anybody, I think everybody's scared to trade Bank of America. And yeah, it is going to be a fun week, bro. It's going to be a fun week. I'm excited. A lot of tech stocks we're looking at. Let's go through the let's go through Microsoft, Google, and all them real quick. I don't want to keep you guys late. Okay. Tesla is on the reverse. So we got to watch for Meta. There's a lot of... Let's go first. First things first, Microsoft, MSFT. I do not expect Microsoft to slow down on their earnings. The state buys from them, people buy from them, businesses buy from them. It's the best stock you could own. You know, they have the computers, they have the software, and then they have, like, you know, everything else that you need to have a business. Everything that you need to be a cop and put down people's information, or the courts, or what else? Schools. You know what I mean? So, businesses, banks, you know. So, this is going to be a sector, and Microsoft it's a stock of its own, you know, honestly. Look at this thing. Think about if you own this thing even in 2008, guys. Wouldn't that be something? Look at this. Do you see what I mean though now? Do you guys see this? Again, these are the trends that the stocks trade in. Stage 1 rally. No. Come on. Okay, stage 1 rally. You put in your base. It shakes it out a little bit. You get a pullback, which could be right here. That's the pullback. And then you rally. All right? And then you rally. Boom. So now do we put in another base? That's what I'm wondering. Because we're coming into an environment that's going to be a little tricky. If you guys have any more questions for me, I'll go through these real quick. But did I put the United States? This looks like, you know, this chart is something else. It really is. There's just, it did look like it had a reverse head and shoulders, left shoulder, head, right shoulder, and it broke down but reversed. Sell volume is up there, so could we look for a pullback to the 50? Look at the double bottom. Look at the 50-day. 1, 2, close to 3, 4. Are we going to get a fifth? Are we going to get a pullback from Microsoft? We could. We could. It wouldn't surprise me just to get a pullback at the valuations that they're at. And it's not like these things are... when people say that the stocks are trading like 2000s, they're not. Stocks in 2000s were not making any money. These companies are making money. All right? You're talking stocks that were 160, 260, 150. All right? 280 times earnings, guys. There's a big difference. Big difference. All right, you know what? It looks bullish, but it really doesn't because of the volume. Maybe this volume actually is deceiving because you see the tail on there. Maybe it pulled back, and then a lot of that volume was the dip buy, and it just was not able to close green because you have this base right here. All right, it came down. Oh my gosh. So, if you guys can see it, I don't know if you can. What it did was this candle pulls back to here, this base right there. I was trying to give you guys the. I just hate that I have to go to that drawing every time. Right there. See how it wicked, found support, and then just went. They said, nope, we're not letting you go. We're not letting you go just yet, for the reasons I just stated. All right. I'm going to go over Meta, okay? I'm going to go over Meta. I'm going to go over quite a few, all right? I want to see if we can get see what happens with Microsoft if we can catch the dip on to the short side. We gotta watch the earnings. It's the only way we're gonna be able to tell what's gonna happen here. What I see is banks, Dow, strong, IWM, but these, this mega cap tech companies, this doesn't pertain to them. I want to see what happens with these stocks that aren't that big, like CRWD, like CrowdStrike. Let's look at this. Look at the range that it's put in. I have to do the work. I have to see what it's trading at. Okay? I have to see what it's trading at. Let's see what these earnings are, where it's trading, if it's able to keep up or not. There's got to be some other ones, like maybe Coinbase or, I'm going to run through the stocks. Maybe Snapchat. Snapchat has a nice looking chart on it. So this thing's holding the 50-day. So if you don't know, if you guys are just joining us, you guys have any tickers or anything, you can throw them in the chat. So Crowd's holding the base right here, this flat top resistance. 50-day as support. All right. The volume's actually increased here, but it didn't really move. I know it's hard to see. Crowd's one of those stocks that just, look at the volume there on those days. That's crazy. Wow. So what'd you do? You had a gap down on earnings? See what I mean? You get to these valuations that doesn't really make sense. Look at the earnings here. Okay, that it's saying that, all it's done is gone sideways. As a matter of fact, it's down. Matter of fact, it's down now. So I'm going to have Crowd on my watch. Not that it has earnings anytime soon. I have no idea. But I'm going to be looking for that. All right. So it's not until August. All right. So that's a sign. Gap down. It probably did it on the previous one. I don't know. But look. Gap down. It sells off. Tries to make up for it. It rallies because of the environment, because of what it is, because of Ukraine and all the other things that were happening with cybersecurity. So it's more of a story play, and we're gonna find out. We're gonna find out. All right. I want to know. You have a lot of these companies that I'm going to go over with in the morning that are going to report, and what's the direction? What's the direction? Do we start to split off in sectors between, or this, like in the indices, and the SPY just continue to fight in the middle, and the Dow's going and then Qs are falling off, and the SPY's just stuck in the middle, I don't know what to do. They're all leaving each other and I'm just sitting here in the middle. So yes, these I'm just trying to give you guys examples. There's some that I need to look up. Let's look at GLDA real quick. Look, it's rallied. It put in the base. It shook them out. I got long November and December and January. All right, I didn't have my live stream then, but guys, I was long on this pullback for the obvious reason, because of the dollar. Look at the rally. These are the setups you guys want to find. You want to find these rallies. Okay, it puts in the base. Okay, and then it has the pullback, only to make the second leg higher. All right, and and GLD and gold, it struggled because of the dollar, because of the dollar being so strong. And gold and energy go hand in hand. Okay. Oh, that's what I wanted to show you guys. RBOB, gasoline futures. Do you guys remember me bringing them up? Huh? Remember I brought them up a couple weeks ago and I said, guys, we have to watch gasoline futures. All right? Gotta watch gasoline futures because it felt like they were trying to do something with itself. All right? Let's go to RBOB. RBOB. Come on. Oh, RB, it has it up here. Look at this. Look at this chart, guys. What does this mean for later on? Does this mean if we get this breakout here, will the Fed go higher? Is the Fed going to continue to raise and possibly overdo things? I like it on the white, kind of, I think. I don't know why it feels like it's so small. Is it on the weekly or something? Maybe I go to a 2-hour chart. for us. Maybe not. But you know, it's selling off. But I think it might go lower because this could be a reverse of, you know, the uptrend base pullback. This could be the bounce up and then the next leg of the sell-off. All right. I also you can look at things in reverse too. So let's reset the chart. There we go. See, guys, downtrend. Now it's putting in a base. What's the longer term trend? It's just, you know, we've had the rally. So maybe, is there a new president? Maybe we get a new president, or this thing goes higher. One of the two. All right. I know that this chart is telling us, this is gasoline futures if you don't know. If this breaks out, okay, I measured this move. This is about where it takes it. It takes us to the top of this, whatchamacallit. From 3.4 to 3.6. All right, so you have the pennant, you have the volume, buy side volume, trying to bring it up and out, or it rejects. Okay, or it rejects. But if this does go higher, this is going to be on the PCE. This is going to be on CPI. This is going to, you know, affect food, affect all that stuff. Because I told you guys, when we start getting into an environment where the Saudis or OPEC is expecting the world with all these interest rate hikes, you know, the paying back college students, just all the stuff that they have going on, the tightening, they're going to expect a recession, and they're not, whether it's small or big, okay, they're not going to pull oil out the ground at so much and be stuck with it. It costs them money. They have to predict what's going to happen down the road. Okay, because it's not like they can say, here, I want the money up front, and then you get the oil 6 months later. Maybe they could. I don't know. I don't know how it works. From what I understand, though, is that this is why you're going to start seeing them produce less, because they don't want to get stuck with it, and it'll also keep that demand, all right, to keep the prices at a decent price for them to get their money. So it would not surprise me. Maybe this needs a little more time. Maybe we hit the uptrend and pull back a little bit and then make it out and then pull back, boom. You know, maybe this isn't until 2024. All right. I had a lot actually for you guys, man, this thing. So GDX, all right, we can watch the gold miners, because as gold goes up, the gold miners valuations should you know, do a little bit better. What do I see here? It's just a longer term downtrend. That sucks. So, man, I had a lot of stuff for you guys too. But that's all. But we've covered an hour. So I'm gonna want to be long Dow stocks, possibly even IWM. All right. And I'm gonna look to be like short, like ARC type names, maybe some of these high tech, high cap or small cap, mid cap tech companies. Maybe not right now. It may not be right now. Maybe next quarter. Maybe the quarter after that. I'm just giving you guys a heads up. But for now, I know where I'm long. All right, I know where I'm long. We could also look at like healthcare. Okay, UNH reported, right? I'm going to bring up Google, Microsoft, and whatnot, and Meta. All right, look at UNH off the bottom. So look at the head and shoulders it's putting in. Oh no, that's UNG. Wow, that thing has sold off, hasn't it? So let's go to UNH. All right. So look at the rally, and then it puts in a little base, and it's pulling back. See if it starts to try and lift up and go higher. These are the stocks I want to look at. They pay dividends. They want dividends. They want safety nets, because the treasuries are paying what they're paying, and the risk appetite isn't there for tech stocks. You had to have already bought them. Now is not the time to be buying. What's the new runners? All right. UNH. What else is in healthcare? Let me see. Oh, you know what? So we did that. Let's go to Google real quick. I'm so sorry. Let's go to Google and Meta. All right. I want to know what these companies are going to do, because if they end up like, we gotta see what the earnings are. We gotta see what the earnings are. Are they atrocious? I know they've already brought down. So you're starting to get up here to the top where these valuations just don't make sense. At least in a 5% interest rate environment, higher taxes, consumer has less money. Okay. Costs more money to borrow. All that fun stuff. Let's see. There is the base. So we're good to go. Google, you got to hold this level. All right. What's the level, you ask? This right here, guys. I need to make this more enjoyable for you guys. I wrote down some stuff and I wanted to be able to have some more for you, but this is actually not too bad of a trend here, guys. All right. Look at the it's like a bull flag almost, right? Am I wrong? Am I right? Look at that. You know? Is that putting in a bull flag there? To an extent. Is that a bull flag? Not really. Is that a bull flag or no? What do you guys think? Would you guys consider that a bull flag or not? Comment and chat if you could. I mean, you know, it's like gapped up and it's just holding this base. I just don't know how much longer it can hold. That's some heavy selling there as well. Let me delete this. Some of these companies have just ran. They've just ran and ran and ran. And this is not 2021. And it's okay. It's not like they're going at crazy valuations. They just need to keep up the revenue. They're going to have to keep up the we went through MSFT, Meta, and we went through Snap already. Meta, I've got like freaking so many lines. I've been trading Meta. Come on, man. I hate having to go all the way down here and do this stuff. Look at that V bottom. That's crazy. She's just a runner. She's just a runner. She's a track star. She's pulling back on some volume here. Maybe there's profit taking. Maybe there's profit taking. I think that's about it, guys. Join us tomorrow morning again. If you could, like, share, and subscribe. All right. It takes a lot of work to put this stuff out. GLW. GLW. No. This might not be a bad stock. Here's another one. All right, lower RSI. The volume's not really there, but this might be another good one to watch out for. And it's just... So, again, I'll reiterate, we have a lot of real estate data that's coming out. Things like that. So tomorrow, guys, be prepared, because I'm going to give you guys a list of a lot of stocks that I have on my watch list, where I'm going to position myself, and what kind of day and week that I'm looking forward to having. All right, this week, I'm going to knock this week out of the park, and you guys better be ready. Better be ready. We have Chipotle, Visa, Verizon, GE, Sherwin-Williams, Moody's, Waste Management. Like, the list goes on and on. But last week, like I said, we had an idea of... the overall market. Okay, like look at Chevron, guys. Puts in the base, it rallies, then puts in the base, pulls back with a small sell-off, and may trend higher. Quite possibly could trend higher. So, isn't that just a beautiful chart? You know, that's just a beautiful chart. It really is. And I'm getting a little tired, so I want to thank you guys for joining us. So I've been calling out stuff in the afternoons and everything. Like I want to see companies like I want to see how Rig, Banks do not earnings, but like I'm going to be long these type of names again, down names. I know I keep repeating myself. I'm going to watch the VIX. I'm going to be looked to short the Qs. You know, I'm going to be looked to short the Qs. All right. This is Roblox. It has yet to break out. I'm not saying it can't, but it could. It almost tried there. I feel like it almost tried. That sucks. That sucks. And look, you guys can see I put in the trend line. I was there for Roblox, but it was, you know, it is what it is. So I think that's all I have tonight, guys. So keep that in mind when we go into these earnings. We got to see how Microsoft, Meta, and all them report. Oh, we do have Chinese earnings, so keep a watch for Chinese stocks. Okay, they could start to get a bounce. Look at Alibaba just sitting here on the lows, trying to change things up and put in a higher low. Baba gets back down here to this area, and look what else you have happening. You have the 50-day trying to curl up. All right, so it pulls back. I will look to try and be long Baba if it gives me the entry. It's so crazy being tired and talking. I'm not even gonna say it. I'm gonna be long Baba if it lets me. Oh shoot. So that's that. We have data. We have to watch it. Again, a trade that's on the list is Snap GM. There's a nice break and retest on GM happening. Is that a break and retest for Baba as well? I'll show you what we have here. All right. Man, that's crazy. That's crazy it's down there that far. Unbelievable. Unbelievable. Right there. See what happens at 38.25. And then you're getting ready to get a 50-day. Hope maybe get, you know, a golden cross. But it needs volume. So yeah, that's all I have for right now. I went over RBOB. I went over earnings. I went over the data. You can expect that rate hike. All right, Intel. I haven't went over Intel. We can go over these more tomorrow and throughout the week. But I want you guys to just know what we're coming into. And a lot of these, the higher the technology goes, guys, the more money is leaving the market, because these fund managers are not going to buy valuations of companies up at this levels. If depending on if they report great earnings and can justify the valuations, you know. But again, it may not take one quarter. It's going to have to be pretty bad. So Intel looks like it's trying to curl itself up, but that's all I have for you guys. I hope it was a good live stream. I had so much written down here, guys, you know, and to go over everything, and I just wanted to get that across to you guys. All right, there's a battle that's coming in play. The macro thesis, interest rates, consumer spending, which is the college tuition, and higher home prices with higher rates, fuel, okay, higher taxes, all that fun stuff. You know, how much more growth can you expect in an environment like that? You know, so that's the point of all this. That's the point of the Fed raising rates and doing that whole thing. So, but we've just had such a run. We've had such a run from 2008. So, KRE is another one I'm going to look at. But like, you want to check out Charles Schwab, Zion, some of the banks. You know, I'll be playing it. There's the pullback. See if it holds. That's what I'll be watching. It's a nice bear flag. It's like no pole flag. That's it. So you guys have a great night. I will see you all tomorrow, bright and early, 7:30 to 4. If you don't know, we trade live Monday through Friday right here on YouTube. Just go to Ivy League Trading, YouTube.com. We start at 7:30 a.m., possibly even 7, and we stream to 4 in the afternoon. And we're going to cover earnings. We're going to cover, charts, trade ideas of the day. We'll go over lessons. We'll go over earnings calls and just different things, news. You guys get some sleep. I'm going to get some sleep. Thanks for joining us again. Please, we're trying to get to, not please, but we're trying to get to 100 subscribers. If you find any of this information valuable, consider hitting it. It takes a lot of work to do this stuff. Thanks, guys. You guys have a great night. We will see you